In the last few episodes that we have in 2019, let's take the time to look back on the year just passed and study how the year went and what 2020 might hold in store for us as a result of how 2019 turned out. So we will spend this episode looking back, and in the next episode or two, we will look ahead at 2020 to see what might be in store for us in the new year. Hello, I'm Bruce Fraser, and welcome to Power Charting. Let's start by having a look at the most recent past. And here we're looking at the NASDAQ 100. You can see that there is a beautiful uptrend that started in early October that has gone up to important new highs. And currently we have what appears to be the beginning of some kind of a pause, range-bound condition, possibly distribution that's forming. You can see here that we've had somewhat of a climactic surge into a near-term high. We'd call that maybe a buying climax, automatic reaction, and an upthrust to a new high, and then a pretty sharp failure. This is a 2-hour chart, by the way. Pretty sharp failure that has gone down and produced a sign of weakness. And so it has cleared out all of these prior lows through here, and now, except for this one, and now is rallying up in what has the look of being a substandard rally. So we earlier, about 4 weeks ago, did a point and figure chart of this area and of this area. And these 2 point and figure charts gave us counts into roughly this zone right here. And they confirmed each other. And so we can see here that we've upthrusted that level. I think the count that we had, we're going to look at the chart here in a second, but we've gone up to 84.40. But notice that on the upthrust, it was able to exceed the high count on the point and figure, but then turned right back in again and failed almost immediately. So looking at this prior chart, now this chart was constructed on November 7th, and you can see here that this count took us 82.81, 83.80, call it 83.81. So that is the area where that got upthrusted over here and then failed as it went to 84.40. That is not uncommon to see a count achieved, then exceeded for a very brief period of time, and then a failure right back into the count zone. And so here we can see this count, the smaller reaccumulation count, this false reaccumulation, went to 83.21. So there's a number of counts that are nesting in this zone. And it appears that the market, let's go back and look again, it appears that the market is trying to stop in this area and it's consolidating, and this very sharp break with a big gap is a sign that there is supply present, volume is expanding, and so we're expecting that this condition is range bound, possibly, probably into the end of the year. Okay, so that's one look. Now here is the S&P, and this is a very short-term 5-minute chart. These we do because they're just darn fun to do. And so we have a buying climax. Here's the upthrust that we just talked about, but in the S&P. And then look at this 2-stage bout of weakness, this decline that has taken them after the upthrust has taken us all the way down into a sign of weakness. So a rally has followed. This is as of yesterday, really Wednesday. You'll see this episode on Friday. but there was a sharp break, and then I think on the Dow, 440 points at the worst on the down day, and then a pretty sharp bounce back, but didn't recover all that was lost prior to that. And so here we're calling this unfinished distribution because there may be more work to be done before, and it may not be distribution, but this leads us to believe that there's a change of character unfolding. And also notice that this decline, subtle as it is a decline that is more severe than the declines that preceded it in the uptrend. And so this is a clue that supply is present, and then more supply shows up. We may even be able to get back to the prior highs, but we should see more supply after that. Okay, moving on, because we have some really cool stuff to look at. This chart you've seen repeatedly. This is as of December 5th. And so this is the Thursday before the show airs, and you can see that there's a beautiful uptrend. This is from a blog that I did on July 8th. So go back and look at this. But the notion here, and that's like right here, that we were right on the razor's edge as the market broke out, came back one last time for another backup here, and a backup here actually, and then it ran up and out of this area. And so you can see that there's quite a good breakout that appears to be occurring here after a 22-month sideways trading range. We've talked about this before, so I just want to give you some orientation to the condition where we are. But look at this last bar. Last bar is a distinctly different bar than any that preceded it in this October-November uptrend. And so we're going to keep a close eye on this, because as we come into year end, the market may be preparing for a change of behavior. Here is the chart that I showed on the final bar with David Keller. Had a great time, and thank you, David, for having me on your program. That was a lot of fun. So here, as a matter of fact, I have a replay of it, but we're going to talk a little bit about it here. So this is the theme, and that is 2019 was a bell-to-bell bull run. It was a dramatic year. The whole year was just up, up, up. And so you can see here that on Christmas Eve 2018, the low was put in. We had an oversold market here. Low was put in, and then a turn. And in the first week of January, this accumulation area was completed. And so I took a count at that time across this whole area. Now this is a 60-minute chart, 60-minute data point and figure, 3-box reversal, 60 minutes standard scaling. Now there's something important that I need to show you about this that we'll come back to in a minute. But you can see this is the year. This year has just been up, up, up. But because of the construction of point and figure, the scale changed here when it went through 25,000. And so there's a little bit of a bias, I guess you'd say, to this, because this area here from 25,000 upward, each one of these boxes goes from 50-point Dow scaling to 500. And so this 500 scaling is a 10-fold increase in the scaling change, which is quite dramatic. And so that's just what happens when you get above 25,000 with standard scaling. I could not have made this chart without doing this standard scaling, because all the data would not have fit, because it truncated all of this data over 25,000. So you can see what a dramatic increase it is. But if we'd maintained 50-point scaling, it would have accelerated upward in a climactic fashion. And this is something very important for us to consider, is that there is somewhat of a climax occurring. Now get this, we've gone over 28,000. This last entry is at 28,000. This count here on the 60-minute goes 26,100 to 27,000. Now, that count has been exceeded temporarily, and it has gone through this area to 20, I think around 28,100, I believe is the area. So really good job so far. As a matter of fact, at the time, this was a count line of 22,650. And at the time that I did this chart and published it, 22,650 was like, to think that it could go over 27,000 was pie in the sky. And in fact, I did do, this is the actual chart that I did back in January on the 9th. And this chart, so it was really just the beginning of the second week, this chart was 5-minute data, 5-minute data ATR scaling, average true range scaling. This is the actual count that we got. You get more detail with a 5-minute than you do with a 60-minute. And so usually what will happen is that you'll get bigger counts with the slightly bigger counts when you get more data in the chart, in the data set. Look at this, 28,313 to 29,254. And so we've gotten very close to the 28,313 level. And we haven't quite achieved it yet, but we're close enough to call it a hit. And then if we go back to this prior chart, you can see that, look what the market did. It just marched right up and did it all within the context of the year 2019. And normally you can't tell how long it'll take for a point and figure count to be fulfilled. But in this case, it did it from the opening bell of the year to the closing bell of the year. This market has just gone up, up, up. So here we are. We've thrown over on this chart, which I just did, November 22nd. And here on the 5-minute chart, we're actually in an area where we could potentially go before the end of the year maybe, or at sometime early in the new year, 29,254. That's entirely possible to go over the top because this has been such a dynamic year. And then the last thing I want to show you, so again, going back to this one, this January 10th blog, will PNF light the way in 2019? Well, we published up this point and figure chart, and quite honestly, a lot of people thought this was completely unattainable, and especially because this area here was a big shakeout at the end of 2018. There was a lot of fear at the time, but look at how quickly this count formed. It's quite dramatic. Okay, so here, this chart goes back to a July 8th blog that I published, and this is a very large count that I did because I wanted to give people a sense for these two, what I call turnings. This is the second turning, this is the third turning in this big bull market. And this in July looked like a final backup and an attempt to jump out and go. In fact, it had two more pullbacks to higher lows after that, but it continued to scale upward higher and higher lows. But here we have this count 2960 3140. This count was missed 2960 by one box. And that's kind of where we are right now with the prior point figure that I just showed you. very close to fulfilling that minimum box. So this is this count area here, and then the larger count area goes 3,800, 3,980. Well, now we take this count of the third turning, which is the area from the beginning of 2018 through the 22 months that followed and led to this breakout. And so the third turning gives us a count 3,620 to 4,000, which is a point and figure confirming count. And so now this yellow area confirms the counts of this total reaccumulation back in 2015, 2016. And then, of course, we have another whole count area here that gives us a count up to 5060 to 5440 on the S&P. So that is just really a dramatic increase that could take place. Okay, so one last look at this chart is to look at this shakeout area, which came right at the end of the year of 2018, because you can see that this has just been a straight up run. As a matter of fact, we're going to look at a longer term chart of this whole area that was 2019, because it really was appeared. Now we have a few weeks to go, but it appears this from opening bell to closing bell is going to be pretty much a straight up move for the year. So if you think of the year as a bar chart, started on the lows, it's going to end very near the highs, most likely, as we go into 2020. And so keep that in mind as we go forward. The other thing is that this shakeout was a classic CO maneuver, because the shakeout had people selling their stock and gave the CO, the composite operator, a great opportunity to accumulate shares off of this very dramatic shakeout low. And they basically just, first of all, they had shares, they continued to be bullish, and they just accumulated shares off the low and on the way up. And so this was just a really dramatic conclusion. This really was the conclusion of this whole reaccumulation area, which we're calling the third turning. And so just a really dramatic run. Okay, so let's put, we've done this, we've done this. So now I want to do a slightly different look here, because, and it's going to be kind of an odd duck to look at the market this way. These are yearly bars, and I want you to just recall what we just talked about here. This green bar is the bar of 2019 for the S&P 500, and we talked about how the market in 2019 was just really a straight up market, open near the lows and is going to close somewhere near the highs here. And so off the 2009 lows in the bull market, we really have only 2 years, oh yeah, 3 years here, where there's been a negative closing year in the market. But notice that except for the 2018 year, where there was a pretty good, quite a bit of volatility, and then it closed off the peaks of the 2017 year, notice that the prior 2 years that were marginally down closed right at the prior year's highs. And so there was, it was a flat year, so to speak, but there really wasn't much price damage at the close of the year. But the thing to notice here about 2019 is how the market just opened and it just went up all year. Like we said, it's going to close somewhere near the highs. This is not going to, this is a not really a fair chart to look at. I wanted to do it just so you could see this bar, because the bar is so dramatic. And then you can see here back in the late 90s, look at this bar that concluded this bull run. And that was quite a bear market back there. This was quite a bear market, as we all remember, and huge bear bar down off of this high. And so here we can see that this has potentially very climactic qualities, but the volume is actually diminished from the prior year. So this is really to show you just um, the recent bars, and of course we also have to keep in mind that percentage-wise we want to really look at this on a percentage basis. So we're going to go from arithmetic scale here, and we're going to go to logarithmic scale and have a look at this trend going. This is actually a trend that goes back into the 40s and the 30s. So this is quite a dramatic bull run in the market. And I want to point out that we drew a trend line here off of this low and this low. In Wyckoff, we take adjacent lows, and then we extend that trend line. This came very close, but did not touch the trend line here. But what we do is we draw the channel line off of the highs that intervene these two important lows really in the 1940s and the 1970s. We draw a parallel line off of these peaks here, and you can see that there was one attempt in the late 90s to throw over this channel, but it came right back into the channel after an attempt to run up in a bull run. This was a real overbought condition. Look how long this trend lasted. And then it came back in, rode along the top of this, and then had the horrific 08, 09 bear market, which got very close to touching the bottom of the range. And now look what we're doing. This bar that we just looked at on the arithmetic has, this bar has become a touch of the upper channel area. And so the arithmetic bar that we saw on the prior chart, this one here, is quite dramatically large. But when you look at it here, it's still quite large, but it's not really that much more dramatic than the bars that preceded in the bull run. But it's still, you can see that this is quite a run up. Now, this gets into what 2020 might hold for us going forward, and that is that we've touched the trend channel again. And so just as has happened in the past in the 50s and the 60s and the 70s, we touching this channel here may actually be a form of resistance, at least to start 2020. And so I'm going to have more on this as we go into future episodes as we get closer to the end of the year. I'm going to talk about other indicators that might help us to understand how 2020 could unfold. But for now, this bar has gone up and touched the top of the channel, which is a definition of overbought in the Wyckofian world. And so this, at least for a period, may have to go sideways before it can run. And a future continuation of the uptrend means that the S&P 500 is going to have to rally through the channel and then start to move away from the channel for the bull market really to be able to continue. And so we want to keep that in mind. So moving on, I want to show you changing gears here, and we'll come back to that chart in future weeks and months as we go into 2020. But in future episodes, as we go into the next few weeks, we're going to talk about indicators that help support what could happen in 2020, just as we did at the beginning of 2019 with those point figure counts. And so here, this is bullish percent. This is an accumulation of all the stocks on the S&P 500 that are in bullish uptrends on their point and figure charts, defined by having a breakout. And so you can see here that we have a series of lower highs. We've just exceeded that here recently. This to me is not an alarming picture yet, because you can see that it's trying to roll over here and it's just touching its moving average. But the S&P 500 itself, which actually had a pretty sharp break here, that's the point figure charts we looked at the beginning of the program. And so here we have a break, and if the bullish percent index breaks below the moving average and starts to show weakness as it did here and as it did here, then we would become concerned. But so far, it's just resting on the moving average, and it very well could rally off of that. And I expect that for the remainder of 2019, the market could be relatively quiet, and may, because we are coming into the end of the year, may attempt to close at or near the highs of the year into the final days, and with momentum could take it into the early part of January of 2020, that we have momentum that carries the market higher. So let's keep that in mind. Finally, I'd like to invite you to come to our TSAA SF annual roundup luncheon, which is going to be December 12th. If you're anywhere near the Bay Area at that time, it'll be in San Francisco. You can take BART right down to downtown, and it's very close to Golden Gate University, actually. John's Grill is a very cool place because it's the fictional location of the Maltese Falcon. And there's actually, the Maltese Falcon is on display in the John's Grill restaurant. Very cool old school restaurant. We're going to have 3 speakers, which is what we normally do. And this year, I'm going to be one of the speakers. And so I'm going to talk about the 2019 review, and then spend time, my 20 minutes or so, looking ahead at 2020 and what I think could be in store for us in the new year, looking at some of the charts that we just discussed today, but also looking at some other things that I'm going to save for the luncheon. But don't despair. I know most of you are in faraway places from San Francisco, and I will bring those up and talk about them on the video power charting episode in the next week or two after. So we have to have some surprises for the attendees at the luncheon. But anyway, if you go to the luncheon, gosh, please come up and say hi to me. And I'm so grateful for all of you and for your attending these power charting episodes. And it just, knowing you're there makes it a lot of fun for me to do these. And so I'm looking forward to 2020. I'm looking forward to the things that we're going to uncover together. I think we've had a really good year in 2019, which was really the kind of the first year for power charting. And I thought it went very well. Hopefully I've gotten a little better at doing these, and am able to express the ideas better and better in a video setting, which is kind of new to me. So anyway, thank you all so much. Hope to see you at the luncheon, and if not, I will see you next week for another episode of Power Charting. Thank you.